video for Wednesday, July the 3rd. Just a quick admin note. Just want to wish everybody a happy 4th of July and spending time with family and friends. Very important. Tomorrow is going to be a beautiful day in the East Coast after actually tons of rain the last couple of weeks. So get out there, enjoy with some barbecue. That's for sure. Also, the morning call email will not be sent out on Friday. It will resume on Monday. Back to work on Monday. So that being said, let's get right into the charts. Markets really don't have a memory. We're actually up, down yesterday. We were up yesterday, reversed, had an end of the day reversal, and now we are down about 7 handles in the pre-market session while I'm recording this. So volatility has begun to pick up, which is great. This is great for us as traders. We're looking for volatility. And now we are looking for either a move lower, which I'm anticipating, and I'll show that to you in the charts. If we get some follow through today, after that nasty reversal we had at the end of the day, too bad it wasn't earlier on, and we can really capitalize on it. But we reversed course yesterday, late afternoon, and we're following today. Now, the tricky thing about this is that tomorrow's a holiday. Friday we are open all day, and 8:30 a.m. is non-farm payroll numbers. So my suggestion would be to keep it very light. If you are a swing trader or you are holding positions, I would not do so going into tomorrow unless you can obviously get out in the pre-market session or at least hedge yourself. As far as options trading, I would be totally flat because you're going to be susceptible to any type of market movement based on the non-farm payroll numbers on Friday. Okay, so let's get right into the chart. Now, I mentioned yesterday that we are at the NYMO, we are at the end of the Bollinger Band, more than likely would start to produce some sort of a sell signal. Well, now we have it. We broke outside of it and we closed in it again. Now, this doesn't mean that it can't go higher again today. Remember, there's a lot of lack of market participants that have actually gone away for the week, and you have your third tier trader watching the positions, and they're mostly told not to do anything unless something really crazy happens. But I just wanted to let you know, keep that in mind. We are overbought in our stochastics and not quite in the RSI, but again, starting to roll over. So this here has produced some sort of a sell signal. And I'll get into the charts in a moment, and you'll see we're at a really big area here where the bulls either have to step up or we're going to get that follow through, that downside correction that we're really looking for. Okay, so bullish percent, S&P touched it ever so slightly, still on a sell signal. You can see it started to curl here. So if we really had a good pop today, then the markets that would produce some sort of a buy signal. But sometimes it's whippy, you can see here, up, down, and then all of a sudden it starts to break again, and that's what it does, trying to find some sort of direction. So still on a sell signal, the bullish percent. Let's take a look at the U.S. dollar. And the U.S. dollar is on fire. And when I say to you on fire, one down day out of 8, and then we just resume its trend up higher. So remember, we're going to have a strong dollar. You're going to have weakness in equities, the commodity block currencies, and commodities itself, and commodity stocks, commodity-related stocks. So I think the U.S. dollar is moving higher and is going to continue to move higher for a while, and that's going to put pressure on the commodity sector. So keep an eye on the dollar. Now, I do think that it is due for some sort of a pullback. I was hoping for some sort of a bull flag while equities actually rally back up into the 1615-ish area, 1620, and then fail, but so far it hasn't happened, so we'll just see. Now the dollar doesn't have to pull back at all. It could just literally just chop around at the upper end of this area here, and then consolidate, unwind its overbought reading, and then move higher. So that's something we want to look at. But the dollar really is key to pay attention to moving forward. Here's the VIX. The VIX really was subdued, didn't do much of anything, but here we had an inside day for the last 3 days. So this is the area where I think the VIX is actually going to start to either move higher or start to break low. But we're above the 200-day moving average, and we're above that and the 50, which is crossing, which is a golden cross here on the daily chart. So this is bullish for the VIX, bearish for the market. So another reason why I think that we're due for some sort of a pullback and continued correction. Now, speaking of the dollar, let's take a look at our gold and oil trade that we have talked about. Here's our gold monthly, and I'd mentioned to you that gold has now entered bear market territory. As you can see here, we have been in a bull market since 2002, and now we have creeped up all the way up in here, and now we're back down to we have officially crossed our 8 and 21 cross, and now that's given us a bear market sell signal. So now, do I think that we pop back up? I would think so, but ultimately, I think that we're looking at about 1100. My guess, actually, even I would say 1,000 to 1150. That's 150 points either way, where I would be looking to buy gold, and that's where I'll be looking to buy gold is 1,000 to 1150, and just below, figure like 980 would be your stop, to accumulate gold and see where it goes from there. Now, obviously, if we lose this area, this cluster area here, then I think all bets will be off, and I think we actually continue lower. But I don't think that's going to happen. We're way, way away from there. But again, right now in the real short term, 1,000 to 1150. You want to start nibbling gold would be a good spot to do so. Now the Huey, the Amex Gold Bug Index, we're going to probably end up going right back into this area here from October of 2009. No question about it. We're here now. Why not? And I just think that this is where it's headed. That's the Gold Bug Index. Doesn't look too good at all. Here is gold itself. Here's the weekly chart of gold. We're sitting at the 1241. We had a pop yesterday, but nonetheless, we reverse course. And gold is up a little bit in the pre-market, not much. So that's something that we're going to be paying attention to as well. Now, let's get right. Oh, I'm sorry. Let's talk about crude oil. Crude oil. I've been showing you this chart from July. We are in this large symmetrical triangle. We have an inverted head and shoulders here, as you can see, above the 200-day moving average. We officially broke out. And now, with the tensions in Egypt and in Syria, now crude oil is actually at 101 and change, even higher than where this is. This is an end-of-day data. This is actually the West Texas Intermediate crude oil. This is the future itself, the oil itself. We did break out this large symmetrical triangle. Now, I wouldn't be chasing it if you did not buy leg into this. Usually we get a little bit of a back test again, and then we roll higher. Now, we want, on this back test, we want crude to stay above this neckline area. We don't want it to go too far below it. Okay, maybe catch the 20, and that would be an ultimate buy signal because you're going to make a higher low from the low from here. So this is crude oil is in play. 106 is going to be the first target, and then the big target's going to be somewhere around 114, 115. That's going to be your next upside target in crude oil. Okay, so now let's go right into the charts. As you can see here, Doji from yesterday, we can't even break out of the uptrend. And again, as you can see, our commodity channel index, CCI, is making a lower high from the previous. And then again, if you keep looking up here, we just continue to make lower lows and lower highs. So our even though the market seems strong, but internally it's really not, and we just keep really staying below this area. We can't get below this long-term uptrend line, and we can't get above this downtrend channel that we're in. So I'm not looking too good. This is the short I'm looking for, and I'll tell you today, we really need to get out of Thursday. Obviously Thursday we have a holiday, but today and Friday, only because that we have that one day off, and we have the non-farm payrolls come out on Friday. We really don't want to get stuck or get trapped in a position that we really can't get out and have no control over. So that's why we're going to keep it really light until then. But nonetheless, this is something that we're looking for. Now, if we break above 162.58, 162.60 in the spiders, then I think there's room to fill this little gap area here. But right now, since we're below it and we continue to stay below it, if we could take out yesterday's low and then 160, then I think all bets are off, and we'll probably end up getting down to this little cluster area of support, 153.90, 154, call it, and then of course down here is 200-day moving average. Okay, so that's what I'm looking at for downside targets. Here's the 30-minute just to show you where we are. We're still looking for our Bollinger Band to point. To pinch a little bit, and we did not really get it. We got a little bit over here, but again, now consolidating is probably going to end up having to break this area here. This is going to be the area here from the 26 we got to really take out, which would be S3, 158.84. Okay, diamonds again, not looking too good. We're sitting on this cluster area, 148.40, so we're going to really need to start breaking down below that. And again, if we start breaking down these key areas where I'm pointing out, then I would say your next rally you could take an objective short, no problem. And that's what I'm going to be looking for. Transports now with oil rallying here above 100, it's going to put pressure on the transportation sector, no question. So if you are looking to do some sort of short trade, look for the weakest stock in the transports. You probably get a good spot to look to short. And again, this being our leader, if they start really transports start to break down, this is not going to be good for equities. And again, here is the IWM. Again, the strongest of the five that we follow, and we're sitting right above it. We're above the 20, above the 50, and above the uptrend line. So I would not be looking to short the Russell. If you're an indexer looking to trade indexes, I would be looking rather than to short the diamonds, which is the IW, or the S&P would be the spiders. Not the Russell, not yet at least. And transports as well. Goldman Sachs clinging. Now, Goldman Sachs came from the bearish symmetry to bullish symmetry, and now barely clinging to this area here. And I drew this horizontal line months ago, and this is still holding true. So if Goldman can't really break above this 50-day moving average, I think Goldman's in trouble, probably going to test the 200-day moving average again. So banks as well. Even though yields are rising now, I guess when fear steps into the market, again, people just get rid of anything that's been working for them to pay for their losses. Okay, XLF above the 50, hanging on to the 20, so holding pretty good here, better than what Goldman's looking at. Some of the bank stocks are actually holding up really well. Goldman just came into some real weakness though, but keep an eye on Goldman, see what happens with that. And we have our Apple double bottom off the low at 390. I think it was 390, 392. And we popped right into it. So we had 3 big day move into the 20-day moving average. Again, if you're looking at, if you have some profits, I'd be looking to take some profits up here and then trail out your stock again, because Apple to me is just a trading stock at the moment. I wouldn't be accumulating anywhere in here. I would be looking to any mid to low threes would be your first spot to look to start to accumulate the stock. Lastly is the Qs. Again, holding pretty well. Holding up really well despite, we have some market volatility here. But again, guys, use caution today and definitely watch out for Friday's non-farm payroll numbers. It's going to be very, very interesting. Really, next week is going to be really the key to hold where we're headed, where this market is headed. Are we reversing and going up? And we're going to continue to rally and start to really start looking to attack the highs, or are we going to resume the downtrend? That's going to be really key. Again, with the holiday week here, very, very quiet, low volume. It's actually been torture watching what the markets are doing. But nonetheless, Friday's non-farm payroll numbers, I believe, is going to set the tone for this month. Okay? Have a great 4th of July. Be safe out there. Use your stops today. We have a half a day, just a quick FYI. 1 o'clock, the market's closed today. So first hour and a half to 2 hours is really all the trading that's really going to be at hand. So if you don't have any money banked in, or you do, protect it and then walk away, shut the computers off, enjoy the rest of the week. Okay, guys, have a great weekend, and we'll talk to you on Monday. Take care.